So, for the last class, we did we did the introduction aspect, right? The basic stage
Yeah,
where we talked about structure and all that, right?
yeah,
So now, what we'll be discussing right here will be the manipulation stage
yeah,
and then the intermediate stage. Okay,
yeah,
we'll be talking about these two today. Let me look at the time frame for these two. It's supposed to be 1 hour and few minutes. Okay,
yeah.
so okay, 1 hour. Okay. So now, have you ever wondered how probably when you are in the market and then you want to trade, you want to enter a sell, and then you enter the sell, place your stop loss, and then price will just take out your stop loss and then go in your way. Has that ever happened to you? Exactly. Now that is just the manipulation. Okay, that's manipulation. Now, when we get to this advanced stage, we are going to talk about how the manipulation works. That's how algo structure works. So for now, this is just like the basic manipulation, the retail concept, how price do manipulate retail traders, the support and resistance and all that, right? So now let's look at some saved markups. Let's look at some saved markups. So we use manipulation. Now let's look at basic markup for manipulation. Now this is structure, okay? The structure, we had this push down, this push up, this push down, and price broke structure right here. Now, when price breaks structure right here, smart money traders, they do trade RTO, that's return to order block, okay? Whereby when they see a break of structure, they're going to mark the order block just below the break of structure, and so that's their PY, and they're going to set their buy limit
Yeah.
and then stop loss below. So they want to see price do this, come down to tag them in and then goes back up. Okay. This is what smart money wants to see. Now, what? what price normally do, like 80, 70 to 80% of the time after the break of structure now. Smart money traders, they are going to mark their POI right here and they want to buy from here. Now, what will price do now? Price is going to come down, tap them, right?
Yeah.
It's going to trigger their entry, right? It's going to like activate them and then give them a little hope that it's going back up. And then price is going to take them out of the trade, right? The price is going to take them out of the trade. Now, Now, after taking this stop loss, what are they going to do? They're going to say, okay, now since the buy failed and then price broke structure from the downside, they call it change of character. I know you've heard of this, right? They call it change of character approach now. Yeah. Now, when they see that, they'll now say, now this is a change of character to the downside. Okay. I
Yeah.
want to set my limits on the supply zone or return to order block right here. Since the trend is changing to bearish trend, so they want to see this after the break, a mitigation, and then continuation. This is what they want to see. But then what price is going to do, or what price might do, price will then do this. Break the structure, right? Take out these guys, and then comes back up, meet
Yeah.
is going to activate their sell limits, okay, or their sell orders, and then give them a little hope, and then it's going to take them out. So you see, price manipulated these guys right here, and also manipulated these guys right here.
Yeah.
Now, this markup right here, how will algo traders now? How will they take this trade? Now, algo traders, remember, we try we try to trade in the way that the institution trade, that the big banks trade, because the big banks, they know where the normal retail traders stop loss are. Okay, so they trade to target all of their stop losses. Okay,
Yes.
so now what we're going to have, right? What we're going to have, the algo trader, after seeing these guys get stopped out, right? This becomes a liquidity level. So now they are going to look for their entry right here.
Yeah.
They're going to take their buy, and then they know that these guys that there will be bunch of sell orders right here. There will be bunch of sell orders right here. So they are going to target these guys, target this high, okay? So price is going to take them out. So now the smart money traders are out. The smart money traders are out, but the algo traders, they are going to take good profit from this trade.
Yes.
Do you understand how this works?
Yes.
All right. So now let's look at what we have next. Um, hold up. Let me look at other samples. Trying to look for a well-detailed chart. Well, where is it? Where is it? Where is it? Okay, let's look at this now. Let's look at this. Now, there are some traders too that trade only chart pattern. They call them
Yeah.
chart pattern traders. Okay,
Yes.
yeah, the flag, the head and shoulder, and all that.
Yes.
Now, support and resistance traders. I failed to mention them right here because support and resistance traders, they want to trade. There's this concept called support turn resistance, resistance turn support.
Yeah.
Okay, so this is our support. If you don't see a support turn resistance, so when price breaks this low, you want to see price tap into this support zone and going to turn resistance, and they want to sell from here.
Yeah.
So you see price going to take them out too. Now, why we need to know support or huh? I think it's my internet. But can you hear me now? Okay, sorry about that. So now I said why we need to know all of this, right? Why we need to know where these retail traders are going to get in or are going to be stopped out is because as algo traders, we want to get in to trade after manipulation, and we are going to get out of the trade after manipulation because now this becomes a liquidity price manipulated smart money traders, that's where we want to
Yeah.
get in the trade, okay? And then when price take them out, that's where we want to get out of the trade. So we need to know all of this, okay?
Yeah.
So now, let's look at this right here. So for this, right?
Yeah.
So for this is what we had. We had price do all of this move to the upside, right? And
Yeah.
then what the price do? Price tighten this, right? Now,
Yeah.
for normal traders, we see this as trend line, right? Trend line
Yeah.
liquidity.
Yeah.
But chart pattern traders, they'll see this as as a bearish, as a bullish flag, rather. As a flag, I don't know what they call it, but they see it as a flag. Whereby, when they see a flag or a wedge or whatever, they want to trade the break and retest. Okay, so when we have a channel, let's call it a channel. When we have this, they're going to draw a trend line, and when it breaks to the downside, they want to trade the retest of the trend line and the upside. So when they see this trend line and the retest of the trend line, they want to trade the upside and the retest of the upside. Okay, that's cool. That's cool. That's cool. Yeah, but now what I'm saying is you need to know how they get manipulated, okay? Because to be honest, everything works, okay? All concepts
Yeah.
work. Even the support and resistance with chart patterns, they do work. But nowadays, you need to know, you need to know all of this so you'll be able to know how to counter them. Because these days, this concept doesn't work. Because when you see this
Yeah.
trend line right here, okay?
Yeah.
This is a break, so this will be the retest they want to buy from here. Okay,
Yeah.
they want to buy from here. Give them a little reaction and then broke out of it. Okay, then this becomes a change of character. It becomes a supply zone. So they want to sell from the supply zone. The price comes back in, tapping the supply zone, right? Give them a little hope and then take them out. Same thing with this. If you look at the overall structure, we're going to see the bullish trend, and then we have this shoulder, this head, and this shoulder. So these chart pattern traders, they want to trade the break and retest too, and then price and take them out. Now, how will algo traders come into this trade? Now, looking at external structure, right? You see,
Yeah.
let's say we have this low, we have this high. So price did this, came back down to this point, right?
Yeah.
Came up, came back down to this point, came back up. So you see, this is external structure, external structure, external structure, right? Then we have this, and then we have this. So this becomes our liquidity. So we take
Yeah.
trades after liquidity has been taken. So you see, after liquidity has been taken, our good traders who want to buy from here to target this high. You understand this?
Yes.
Okay, cool. So let's look at these basic examples. Let's look at these basic examples. We had this right here, external structure, external structure. Price did this, came down, came up, came down. This is a normal break of structure. They'll want to sell from here because we have this break right here. But then just let's look at the next chart, okay? See what price did? Price came into the POI, gave a little reaction, started going down, and then takes them out, okay? So when price takes them out, we have this high right here as our break, this clean POI right here. So let's see what the price do. We have this right here, right, later. So we have this, okay? This becomes resistance, turn support. So these guys, they want to buy from here, okay? They might have taken their trade from here. And then there's
Yeah.
also a POI right here for the change of characters trader. Now let's see
Yeah.
what the price do. Now you see what price did? Price took out the support, the resistance turn support trader. For these guys right here that want to trade the return to order block after the break, price tag them in, give them a little hope right here, give them a little came down and then takes them out. So this is basically how manipulation works, okay? Like
Okay.
like you need to understand you need to understand the points at which retail traders will get in the trade, okay? They want to get into the trade. So when they get into that trade, we want to trade against them, right? We want to target them, take all of their stop losses, just like the institution, right? That's what we try to do. Yeah. So now another aspect of manipulation is the highs and low. I must have mentioned that, yeah, that I look at every high and every low as liquidity.
Yeah.
All of this high, this low, this high, this low. I look at all this as liquidity because near future price is going to take all of these, okay? Take
Yeah.
this high, price took this high was taken, this low was taken, this low yet to be taken, this high taken, okay? High taken, low taken, you see? All of these are liquidity levels, okay? So
Okay.
mm, now, okay? Now, the next session highs and low, right? They are basically like the major session we should be looking at to trade, right? Is Frankfurt, London, and New York. Okay, Frankfurt, London, and New York. Those are like the basic sessions. Those are the sessions I trade, right? Now,
Yeah.
what I mean by session high and session low as manipulation highs and low, right? Now, for every session, right? For every session, the highs and the lows are liquidity. Now, this right here is this is Asian session. This box in green, right? So let's see. This high and this low is Asian high and Asian low, right? It is liquidity, right? We want to see
Yeah.
price take out either the high or the low, or for price to take out both the high and the low, right? And for every session, let me show you this illustration right here. Now, for every session high and low, right? Price, price, price use how will I put this? Okay. Let me draw the box. Okay, so we understand. Okay, let's say this is Asia, this is London, and this is New York, right? Now, for every session, right, price creates liquidity for the next session. In the sense that for this session, price leaves the high, price creates the high of this session and the low of this session. It creates them, right? It leaves the high and the low so that the next session or the future session is going to take them out. Okay. So it defends goes this way. Price price creates liquidity for every session. For this session liquidity, the next session might come and take it out. For this session liquidity, this session might come and take it out. So when we have this right here, this Asian, then when we get to London, London might then take out this Asian liquidity and then comes back up to take out the high, right? And then when this high and this low remains, right? For New York, New York might come and take out the high. So you see, for every session, liquidity are being kept for the next session, okay? So every high and every low, every session is liquidity. Now let's
Yeah.
look at this right here. Let's look at this. And remember, liquidity can be used as our entry or target, right? So we can use session high and session lows as yeah, we can use session high and session low as entries and targets, okay? Now we've got this right here. Let me mark this out. Let me mark this out. Okay, so we've got this right here. This is Asian high, this Asian low. Now, when Asian closed, right, we've got Frankfurt. Frankfurt is from this to this. Now, when Frankfurt opened, Frankfurt took out Asian low. Okay, Frankfurt took out Asian low. After the take of Asian low right here, probably there might be something price reacting to that's going to give us our trade opportunity. Okay, because I took this morning. Was it this buy? Yeah, I think I took this buy this morning. Yeah, because of this. Okay, so Frankfurt took out Asian low, right? And then Frankfurt failed to take out Asian high. So Asian low has been taken. Then when we got to London, okay, what did London do? London took out Frankfurt low, right? London took out Frankfurt low, and then it created London low, right? Then during New York, right? New York took out
Yeah.
New York took out London high. Okay. Now for future Pride might come back to take out both New York low and London low. So let's look at other examples. Good. Now for this guy right here, this was Asian high and Asian low. What happened? Frankfurt right here took out Asian low. So this has been taken by Frankfurt. So this remains as liquidity. Now, what the price do, right? During London, right? London took out Frankfurt low and came back
Yeah.
up to take out Asian high. So now we see this liquidity has been taken, this one has been taken. And when it got taken, we left this one as our liquidity level, the London low and the London high. Then during New York failed to take the high, but then New York came to take the low. So now when in a trade, you can use session high and session lows as your targets, right? You can use them as your potential target. And let's
Yeah.
see, good for this right here. For this right here, this was this was New York, right? So if you look at this chart right here, Asian high and Asian low got taken. This got taken. This got taken by New York. So you see, this is Asian, this is London, this is New York, right? Asian, London, New York. Asian, London, New York, Asian, London, New York. So if you go back on chart and look at this session high and session low, you're going to notice that these guys are all liquidity levels, right? So
Yeah.
same thing with previous daily high, previous daily low, weekly high, weekly low, monthly high, and monthly low, right? See, at a point in time, previous daily high was taken, previous daily low was taken. So you can use all of these as you can use all of these as targets, okay? So I'm going to send you this image. This guy, I'll send you this, and I'll send you this. Okay. Now you understand the session high and session low,
Yeah.
and then the daily high, daily low. Okay, cool. Used over 30 minutes for this already. So now let's get to the intermediate stage. This is where we talk about supply and demand, EPA and IPA. Okay, so now I'm going to give you I'm going to show you a different view of supply and demand. Now, supply and demand. Supply, let me start from demand. Demand is simply a buy zone and supply is a sell zone. Okay. So
Okay.
we look at we look at supply levels as sell levels, right? We want to sell from supply and want to buy from demand. Okay. So in the sense that when we have this, right? At the breakout structure, we say this is demand, right? This is demand. When we have this at the breakout structure, we say this is supply. So what we want to see price coming to supply for us to sell, coming to the demand for us to buy. But then there are reasons we need to see a lot of things in order to consider this as a valid demand, right? There are things we need to see in order to consider this as a valid supply zone, right? So we will look into that very soon. So now supply zones. Okay, let's start from demand. Demand zone is the last sell to buy candle, while supply zone is the last buy to sell candle. Let's see examples of that. Let's use this time frame. Let's use the higher time frame. Let's just mark the sell to buy and buy to sell candle so you see. Okay. So from this current chart right here, this candle right here is the last buy to sell candle. So some people do mark this as supply zone, right? Why for
Yeah.
demand zone, it is the last sell to buy candle. It is the last sell, it's the last sell to buy candle. So we can say this is demand, this is supply, right? But before we mark a zone as a supply or a demand zone, we will need to see a lot of confirmation, right? We need to see a lot of reasons. Okay. Now,
Yeah.
how do you spot a valid supply and demand zone? Yeah, liquidity needs to be there. Exactly. So now, how to spot a buy supply and demand zone? First of all, we want to see a break of structure. So let's say this is an uptrend, right?
Right.
We want to see a break of structure, a BOS. We want to see this. Okay. This is number one,
Yeah.
right? We want to see this first. The next thing we want to see inducement. And what is inducement? Inducement is liquidity. So for a valid supply and demand zone, we want to see liquidity before the zone. Okay. We want to see liquidity before the zone. And
Yeah.
when we mean liquidity, we want to see this, right?
Yeah.
Then there is a break of structure right here. So this right here becomes liquidity. We call it inducement. This becomes inducement. Okay. Now, when we see this high is also a break of structure. Remember, right? It's a break of structure. Remember, I said I see every high and every low as liquidity, right?
Yeah.
Now, so I see every low and every high as liquidity. So we have this right here. So I see this low as liquidity. Now, before this, let me go back a little bit. So before before that structure, right? When I see price action printing this way, I see this as my break of structure and I see this as my liquidity. Okay. But then
Yeah.
what did I do? Okay. But then when price failed to come to take this inducement low, we got this, right? And we got this. This becomes another break of structure. Then I'm going to see this low as my inducement. I'm going to see this low as my inducement. Now, for this low to become a valid inducement, right? Price needs to take out the low. Do you get that? Price
Yeah.
needs to take out the low. And when price takes out the low, price does this, came back down and takes out the low. This now becomes inducement. This BOS right here now becomes a fake BOS. Okay. Okay, okay. Yeah. Don't worry. So when we got this right here, okay, when we got this,
Okay.
okay, so this then becomes our fabric of structure. This then becomes our inducement, right? Now, after the inducement has been taken, right, for you to consider this level, because there might be a sell to buy candle right here.
Yeah.
For this sell to buy candle to be valid, we need to see IPA. We're going to talk about IPA and EPA, okay? We're going to talk about them. So we need to see yeah.
Yeah.
So when we get to EPA and IPA, you understand better. So now this becomes imbalance, right? Imbalance before the zone. So then this becomes a valid demand zone. This becomes a valid demand zone. Okay. Then same scenario for the supply zone. Now, how we see supply and demand zone now. You know, supply and demand zone most times is the last sell to buy candle, right? But then how we see supply and demand zone, how do I tell you this? How we see supply and demand zone when we have this, this is a range low, this is a range high. Now, at this level right here, this becomes our range low right here. Then this becomes
Yeah.
the break, okay? This becomes a range high. This is the break. Now, that retracement, right? We have this up move. This whole move down right here is our demand zone. This the whole move down is our demand zone. Same
Yeah.
thing with this right here. Same thing with this right here. This whole move right here is our demand. Same thing for the supply. Now let's look at these examples. Let's look at this markup right here. For this markup, we have this. We have this impulsive move, corrective move, impulsive move, corrective, and all that, right? Now, the whole retracement, the whole pullback right here is our demand zone.
Yeah.
The whole pullback is our demand zone. When we have um our last sell to buy candle right here, it becomes our refined POI or our refined demand. Okay, so when we figure this, we've got the break right here, a retracement. This whole range becomes our demand. Same thing for the supply. We have this impulsive move to the downside. We have this corrective move, impulsive move to the downside, corrective, impulsive move to the downside, corrective, and impulsive. So this whole range right here is our supply. This whole range
Wait,
is our
hold on,
supply.
hold
This
on.
whole range is our supply. Oh, okay, yeah. You know this whole order flow right here. This whole order flow is a bearish order flow. This whole one is a bullish order flow. So when we're in a bullish order flow, the whole pullback is retrace is demand zone. When you are in a bearish order flow, the whole pullback is supply. Okay. Now we have this. Okay, before we get into this, before we get this, let me explain what EPA and IPA is. Let me explain
Yeah.
what EPA and IPA is in order for us to look into this right here. Because most of our trades is based on EPA and IPA, right? You might be waiting for, let me look at the chart. Okay, was it this one? Let me look at the chart. I'm coming. Can't remember where I did yesterday's markup. What broker did I use? I can't remember the broker I used. Okay, anyways, let's explain what EPA and IPA. Now, EPA is okay, I think after EPA, IPA we have okay, that's when we talk about the algo, everything about algo, okay. So now let's quickly talk about EPA and IPA. EPA is efficient price action and IPA is inefficient price action, as easy as it looks, okay. It is
Yeah.
imbalanced, but then in like the advanced way, okay. It's imbalanced, but in an advanced way. So let's see this. Now, this is normal imbalance, right? This is normal imbalance, we all know, okay? Whereby when price is efficient, you don't see any imbalance. And when
Yeah.
price is inefficient, right, we see this as imbalance. Now, this is for just three candlesticks, okay? This is for just three candlesticks. Now, this is for a structure point, okay, where we have this will push up, right, this push down, okay, in the sense that we have this imbalance right here, okay, but then price came back and filled the imbalance. So this EPA, then price came all the way up, came back down, okay. When price did this, this was the high and this was the low. So we can see this high right here got mitigated by this low, right? So we see this is efficient price action. You understand this, right?
Yeah.
This is easy.
Yeah.
We all know this side. Right. Then for inefficient price action, okay, we have the same pattern right here. But then it's what we had. When price did this pullback, it failed to fill this slow imbalance right here. So if you want to mark the IPA, if you want to mark the imbalance, we mark from this week to this week, okay? Same thing with this. We had this low and then this high. Price did all of this push up, push down, and went back up. So this low right there to this is IPA. You understand this?
Yeah.
Okay. Now, this is for a full market structure right here. We have this now. For our structure points, we have this high, this low, this high, this low, and then price broke out of the range from this point right here, broke out,
Yes.
came down to give us this high, this low. So in everything, you need to relate structures, okay? So we have this high, this low, this high to this low, this high, okay? Now, from this low to this high, price was inefficient, okay? Because this low failed to come down to mitigate this high. Because we want to see this, we want to see this, this low, this high was mitigated by this low right here. We want to see this too, okay? This is for
Yes.
efficient price action. But then if price is doing this, okay, is doing this is IPA, right? This is IPA. Price failed to fill the inefficiency.
Yes.
So yeah. So now let's see how we mark IPA and EPA now. So this high right here to this low. This low did not come back to fill this. So this is IPA. And price is inefficient, but when price comes back to fill that inefficiency, price then turns into efficiency. In the sense that if this price should come back down to this point right here, this becomes EPA. Do you
Yes.
understand?
Yes.
Okay, cool. Then we have this high, right? Price broke it out, came down to this point. We had this low right here. So you see, this low range is inefficient price action. Let's look at the next example. I think it's continuation of the chart. Good. Now, don't forget, price is inefficient until it gets efficient. Okay. So this is the same example as before. Okay. So this from this high to this low was IPA, okay, inefficient price action. But what the price do? Price came back down and then fill up all of the IPA. So immediately price filled up the IPA, right?
Yes.
This becomes the high, this becomes the low. So this low right here mitigated this high. So this becomes EPA, okay? So IPA turned EPA. Do you understand this?
Yes.
Okay. Let's look at more examples because looking at examples is going to make us familiar with the term. We had this right here. We had this high right here to this low. This is EPA, okay? Because this high was mitigated by this low. So this is EPA, right? This high was mitigated by this low. So this is EPA. Now we have this right here, this structure point two. We had this high and this low. You see, this is IPA because price did not fill all of the imbalances right here. So this is IPA. But then what the price do? Price later came back down to fill this. So then we had EPA. So IPA turned into EPA. Now this the advantage of EPA and IPA is that sometimes, right? Sometimes price doesn't respect price doesn't respect the last price doesn't respect the last sell to buy candle or the last buy to sell candle as your valid supply demand. So instead, what the price do? Price is going to just tap in your IPA or tap in your EPA and then reverses without coming down to your POI. I think we're going to see other examples on that. For that, let's look at this. I hope I saved it. Mm. Now see this example. I want to show you this example right here. I'm looking at this chart. Okay, see this example right here. Okay, when we got this break right here, there is a last sell to buy candle right here as our
Yes.
demand. But then what the price do on this day? Price just mitigated the EPA right here and then it reverses. So you see, sometimes you're going to move a lot of move if you don't understand how EPA and IPA works. So you see, on this day, price failed to come back down and give us a proper mitigation for our PY. Price only tap the EPA and then reverses. Do you understand this?
Yes.
Same thing with these two. This was a high. This is EPA. Price mitigated the EPA right here. Okay, because at this point, this high to this low was IPA. Okay, but then price came back down to fill it up. Okay, fill it up, and then this becomes EPA, and then price reverses. Okay, so let's go back to look at our examples. If you don't understand anything as we go, don't forget to ask questions, okay? All right, that's good. So same thing with these examples. And some of these examples are old, okay? I did old markups. So in case some of them are not accurate, okay? So we have this right here. We have this high, okay, to this low. This external high, external low, IPA. Agree?
Okay.
IPA. Same thing with
Uh,
this external high. So for every inefficient price action, price needs to fill up or IPA in order for it to
right.
turn EPA. And when you notice when price does all of this, okay, it's going to give us the manipulation setup algo structure. Okay.
Yes.
The manipulation setup for short, we call it MSU. I think you know this already. All right, no problem. Let me not rush things. We are going to that. Because if you notice IP and EPA plus supply and demand is going to give you manipulation setup. That's the algo structure.
Yes.
But let's not rush. When we get there, we will understand. So
Yes.
let's just keep
Just
yep. So let's see if this is the same as the previous one. Okay. Now this is just the simple illustration of EP and IPA. There is something called advanced EP and advanced IPA. Okay, so I'm going to teach this, but I don't use it that much in chat because it is hard to spot. Okay, let's look at it now. For the advanced EP and IPA, right? We know this is EPA. We know this is EPA, right? But then when you get a break of structure, right, and then you get a retracement, right? Immediately after the break of structure, you get a retracement. And that retracement should be like 1 2 3 opposing candle, right? 1 2 3 opposing candle. And we said that for this bearish move, these are all black candles, right? Then after the break, you then get either 1 2 3 or 4 um or 4 bullish candles, right? And then we get this, right?
yes.
Now we are already looking at advanced EPA, but then go on the next page to understand. Same thing with this at the break when we get all bullish candles, and then we get 1 2 or 3 bearish candles, and then another push up. We are looking into the advanced EPA. So let's look at the next page for easy clarification. So for the next page, we have this. Okay. So next page, we have this guy right here. So this is the break right here. Okay. Then we have 1 2 3 opposing candles, 3 black candles, okay, bearish candles, and then we have this break right here. So now this whole range becomes our advanced EPA, right? So we have
Yes.
this now. And after this has formed, we mark this whole range, right? And don't forget, in order to mark out your value supply or your value demand zone, we need to see a lot of things, right? We need criteria. We need to see a break of structure, a liquidity, and then imbalances. So when we have this right here, right? Price indicator value supplies. So for this, immediately after the break, the 3 candles after them, right, becomes the advanced DP, right? And when we got the supply or demand zone criteria, right? Then we say that zone becomes a value supply zone. Okay. Then same thing for the buy. Immediately after the break right here, we then have retracement, and this retracement now becomes 1 2 or 3 black candles, right? Okay, how about now?
It getting echo. Yes. This time right.
Okay, it's good now, right?
Yeah.
Okay, so let me come back, okay? Now, let's say we have a break of structure, right?
Right.
And then we then see 3 opposing candles. Let's say these are all bullish candles, green candle, right? And then we then see 3 red candles, and then we then have liquidity before those three candles.
Yes.
Those three candles becomes a valid demand zone. That's like an advanced EPA. Okay, you get that? We are going to look at the chart for it. Let's look at the charts. Good. Now, see what I was talking about? Right? These are structure points. These are structure points, right? Then immediately after the break of this structure point, see, immediately after the break, we had
Yes.
two opposing candles, right? Blue candles. Sorry, green candles, okay? Two bullish candles. And then when we had the bullish candles, we marked the candles, we marked the whole range as our supply zone. Remember, for every pullback, the whole range is our supply, right? For every pullback, the whole range is our supply. So when we mark this right here after the break, then see what we got. We got this, we got this, we got this. These are break of structure, these are inducement, right? Then price start going up. Before price come to this level, to what price did, price came back up, mitigated this. So now, seeing this liquidity, seeing this break of structure, seeing this imbalance right here, it's going to tell us that this zone is our valid supply.
Yes.
Yeah, this is two. That's why I said from like 1 to 4. Okay. So it can be one, it can be two, it can be three, it can be four. Okay.
Okay.
So this is what we had. Just don't forget immediately after the break, okay? So this like a more valid POI. Then let's look at the next example, right? Now for this example right here, this is a little bit tricky because this is what we have in this example. This right here, this is wrong. Remember I said these markups are old, right? This is wrong. So looking at structure point, right? We had this high, and this low. Okay. Then price broke it, came down, came up, broke it. Then see what we had now. Price broke it to this point, broke
Yes.
this low, came back up. Now this becomes a new range. Price broke this now. Then see what we had when price broke this. We had just one candle, one
Yes.
bearish candle. Okay. So this is advanced EPA. But then for it to be advanced EPA, you need to see your valid. You need to see you need to see you need to see the reasons why that zone is supposed to be valid. So when price did this, we mark out the whole range, right? Now for it to be valid, we need to see a break of structure and inducement, right? Now within candlestick, okay, when price came down, price came up to this point, okay, price came down to this level, came up to this level. So we had this break right here, and then this low becomes inducement. Then price came down and mitigated this valid demand zone, and then yes, but then, reading every candlestick story, right? These two candles right here, right? These two candles. Remember, this candle opened here,
Yes.
closed here. This one opened here, closed here, and then for you to understand this, a bullish candle, right? This is a bullish candle. Now, when price came down, price came up to this point, okay? Price came down to this level, came back down to this point, and then went back up. So this is our valid demand zone. Okay, so this is what we had right here. For every candlestick story, right? When wicks, candlestick wick signifies, it means that price has been at those level in some point, okay? So what this means, now when this candle opened here, it came down to this point, right? Then it went back up to this week high and then came down here and then closes here. So for these two candles right here, this one and this one, what did price do? Let me change the color. So you understand. What did price do? Price came up to this level, came down, closed right here, and also came back down to this point and then went back up. So if you go on the 1 minute time frame, you're going to see structure this way, right? This way. This is our black candle POI right here. You're going to see this break, the inducement, and then price came back down, price came back down, indicated the POI, and then up. This is what you're going to see on lower time frame. You understand this? So now this right here is advanced EPA, but you need to understand candlestick stories, okay?
Yes.
Then let's see what we have. We have this right here for advanced EPA. Is this okay? Now this combination of this EPA and IPA too, because from this high to this low we have IPA. Okay, then price came back down to fill the IPA, and then this high was indicated by this low, so this becomes EPA. So now, if you look at the algo structure from here, although we've not done that, right? When EPA, when IPA, okay, turns
Yes.
into EPA, we get our algo structure. Just take a look at this. We have this, and this. You see this pattern I'm drawing right here?
Yes.
This is going to be like this is going to be like the basic of everything we'll be doing as algo traders. So when we get there, this pattern is going to be everything. But I don't talk about it now because you said you don't know it. Because even from here, just remember when we on our next class, when we get to algo structure, we're going to remember all of this. Okay.
Okay.
Yeah. So let's look at this now. Now, how do you mark out IP and EPA? Since you said you've done order flow, it must not be hard, okay? So
Yes.
for every impulsive and corrective move, you mark the highs and the lows, mark the high and the low, and you check if the high has been mitigated, 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 EPA. If the high did not get mitigated, we call it IPA. This for an uptrend, just
Yes.
like what we had here. This high communicated by this high failed to get mitigated, so all these are IPA, okay? So let's see for the downtrend. For the downtrend, we have same thing right here, okay? Same thing right here. We should mark all high and all low, okay? So everything still brings us back to structure point, okay? So
Yes.
if this low if this low get mitigated by this high, is EPA. If this high, if this low right here fail to get mitigated, it is IPA. Okay. So until it gets mitigated, that is yeah. Doji candle. You can't tell if it is bullish or a bearish candle. Okay. So
Okay.
as you get, you can't tell if it's a bullish or a bearish candle. So you leave it that way until you see a clearer candle, okay? Until you see a candle with a body, either a blue or a black candle. You understand?
Yes.
All right. So let's see what we have next. Okay. Because for don't forget for EP and IPA you need external structure low or high. Okay. And this did not give us any external structure because this is also a black move. This also a bearish move. Okay. So we want to see this will move down. Okay. And this will retracement. So these are external structure high. These are external structure low. So that doji candle right there was nothing. So if it's the retracement, yes, you mark it that way. That means if this black candle right here is, yeah, if it is a bullish candle, you mark it, okay? It is and IEPA. Okay,
Yeah.
you understand, right? You understand, bro? Okay, now, yeah, no, okay. I think my color is confusing. Let's look at this one. Okay, let's look at this.
Yeah.
This is a doji candle, right?
Yeah.
This one is a doji candle. So you know this doji candle is also a structure point because we have this. Okay, we have this, and then this doji candle gives us a structure point. Okay, so now
Okay.
for this low failed to mitigated by this high. So this is IPA. So assuming this doji candle comes to this level right here, there's a doji candle right here. This is EPA. As long as the high mitigate the low, it is EPA. Okay. And don't forget it has to be an opposing candle. So for this one right here, if this candle was a bullish candle, right? If it was a white candle, then we can consider it as EPA. You understand? That is, I understand you. But but don't forget, all of these are bearish candles. All are bearish candles. If this was a bullish candle, that means if this doji right here was bullish, right? It was green candle, then we'll be getting something like this. We'll be getting something like this, and something like this, right? Then this right here will be the doji. Then you can consider this as your structure point. Then if you have this again, if you have this, then you can say this is EPA. I don't know if you understand this. But then remember when we're marking our structure points, right? We consider the time frame we are in because on this chart right here, this is the 4 hours time frame, and on the 4 hour time frame, see what we had. We had this push, and these are all bearish candles. Okay, so price came all the way down here. But if this right here was a bullish candle, right? If it was a bullish candle, then we will get this. Then we will get this and this. So now on this time frame, we only have this. But when we go on lower time frame, then we can see this. And on lower time frame, when we have this right here, probably all this will change too, and then we can get this at EPA or IPA or whatever the lower time frame is saying. Do you understand? Yes, yes, because on smaller time frame, if you go and look at it on smaller time frame, this will be what we have. So yeah, on smaller time frame, you can see what you want to see on smaller time frame, either EP or IP. But right now, we are focusing on just this time frame, and on this time frame, we only got this. Okay, so you understand that now, right? On
Yeah.
smaller time frame, yeah, but but right now we are focusing on this time frame. You understand?
Yeah.
Okay, bro. Okay. So let's look at I think okay. Sorry about that. Okay. So now let's look at I think there are other examples I'm trying to look at it. Okay. So we just talked about we just finished talking about EP and IP, right?
Yeah.
Now let's look at how we relate supply and demand to EP and IP. This is simple logic, okay?
Yes.
So from here, right, how we relate supply and demand with CPI and IPA. This chart basically explains everything. We have this, right? If impulse moves to the upside, corrective moves to the downside, we mark the whole range as our demand zone, right? Then any POI that is found within this demand is our refined demand. That means we might be getting the last sell to buy candle right here.
Yes.
We're going to mark this as a refined demand zone. Now, then price broke this structure, right, to the upside, did this, did this. This will pull back to become our demand. Okay. Now,
Yes.
if this low right here, if this low fail to mitigate this high, this is IPA. Okay. Then when price did this to the upside, remember our reasons for a valid demand or supply, right? So when we have this markup right here, so this becomes IPA, right? Then we have this break of structure, this break of structure. When price comes down to take this low, this becomes inducement. So we have seen two reasons for our valid sorry, I'm coming. I don't know. Let me increase my brightness. Okay. All right. Let me explain this again, okay? So now, when we have this, 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 right? So this high failed to get mitigated by this low. So this becomes IPA.
Yes.
One, this is IPA, okay? And then price then breaks structure to the upside, we have a break of structure, right?
Yes.
Then when price comes down and then takes this low right here, this then becomes inducement. So remember our reasons, our valid supply or demand zone criteria. We need to see a BOS, we need to see inducement and imbalance. Okay. So now when this happens right here, when this low gets taken, immediately this low gets taken right here, this becomes inducement. This high right here then becomes a fake breakup structure.
Okay.
So then when price comes down, take this inducement, price comes down to this level. Now this IPA then becomes EPA.
Yes.
Why? Because this high has been mitigated by this low right here. It then becomes EPA. And when it becomes EPA, remember this whole pullback is our demand. Price is also mitigating the demand zone and is ready to go up. Do you understand this?
Yes. Yes. Mm, so this
Okay.
is become our true behavior. This one.
This then this one.
This
Exactly.
is a strong
This
high.
one. That means
Our range is
exactly.
from this to this. This is inducement.
Yes. Yes, this is inducement. Then exactly. So now for that inducement to happen, price fill the IPA, the IPA turn to EPA, and then price mitigates the demand zone. Sometimes there's going to be a large chunk of imbalances right here, and there's going to be a nice sell to buy candle right here. So now most people might be marking this zone and say this is our demand. But then we are mistaken. This whole range is our demand. This is just a refinement. So price can just come down here, mitigate the demand, and then goes back up. And price can also come back to this extreme POI and then goes back up. Understand that?
Yes.
Same thing for this supply zone. This is EPA, right? This is EPA. This is our whole supply zone. When price comes back, mitigate this mitigation of the supply zone right here. It shows that price efficient. Okay. So this is just like two scenario of how we relate supply to demand zone. Do you understand that?
Yes.
That's it. Good, good. So now okay, we've done this after we just did this right here. Now, accumulation and distribution. This is basically this is what we know, right? This is the basic. So basically, right, for this mentorship breakdown, right, from the introduction down to the basic stage, down to the manipulation stage, down to the intermediate stage. Okay, it is everything we know about. It is almost everything we learn from smart money, but being taught in a different way. Okay, now when we get to the advanced stage, that is when we talk about everything about algo. We'll talk about the algo structure, how the algo works. Then we'll talk about the algo liquidity types, how we select PY using weeks, and then we go into the professional, the entry types, that the entry models and all of that. Okay, so and other stuff. So these are like the basic thing. So now let's round up the accumulation and distribution. Accumulation and distribution, right? When price is moving in an uptrend, right? We have a bullish order flow, right? Price needs to slow down. Price needs to catch a break, right? Price needs to slow down. If it wants to reverse, right, price is going to slow down, giving us different reasons to take sell, different reasons to take sell, different reasons to take sales before reversing. This right here is distribution. Okay. When price is coming down and price wants to reverse, we are going to see accumulation, or probably we call it range, price range before going back up, giving us reasons to buy from all here. So that means when you see a large move, okay, and you want to buy, right?
Yeah.
It is advisable not to catch a falling knife. If you see a trade, if you see price action, right, falling down like
Yeah.
in a mad spike, don't just jump in by it. You wait for accumulation, okay? And sometimes this might just be the redistribution and then price going to fall down. So you wait to see all of the entry types and entry models in order for you to take the buy, okay?
Yeah.
So it's advisable when you see this, you wait for price to do whatever it wants to do. Now, sometimes, okay, there's what we call AMD from smart money, accumulation, manipulation, and distribution. Hereby, when we have this, price has been accumulating and price coming from a downtrend, right? And you want to see price reverse. What price might do sometimes, price will just accumulate. This is the accumulation phase and then distribute to the downside, right? Give us a fake move and then goes back up. This then becomes distribution. So right here we have accumulation. This becomes manipulation. That means see what happened here. Most traders were looking to buy after this manipulation. They were looking to buy from here after the accumulation. But then what the price do? Price going to manipulate everybody, take them out, then react off something from here, and then price going to distribute and give us the real move. If you check news release, news move, okay, we are going to see a lot of this happen. Whereby after a huge spike down from the news, price might just accumulate, manipulates,
Yeah.
and then goes back up. Because the move, just if you go back on your chart and check all of this, the move after the real news release is the real move. Okay, because sometimes let's say news is like 230 at exactly 230, they're going to say spike up, okay? A spike up. But then that is just manipulation. That's a fake move, okay? The real move happens after the news. That means price might be doing this, okay? At 230, price just spike up, right? And then does this and then drop the real move. In the sense that price might have done this already. Price might have done it before the news. Accumulation, manipulate traders, okay, to the upside and then distribute to the downside and give us a real move. So if you check the chart, most time the real move is often happens after the news. Okay, if you check the chart, you're going to see that. Let's look at some examples. Let's look at some examples. News. Okay, this was news right here. This was news. Because on this day, I can remember when price did all of this accumulation, right? All of this distribution right here, price came back down, manipulate traders. And then I took this sell and I think I went out of this sell at this low right here. So what people might be doing now, probably they're in this sell that say, since it's the news move, the sell will go down, we're going to keep on going down. But instead, what the price do after the accumulation, price manipulated traders and then went up the real move. So here we have accumulation, manipulation, and then price distributed.
Yes.
So let's see other news move. This was not news. This right here was not news. Okay, this was news. This was news. Now see what happened right here. Price did all of this chunky move up. And then at that news hour, price came back down. When price came back down, don't forget the real move is often after the news. When price came back down, price went back up. So here we have accumulation, manipulation, and then the real move, okay, distribution. So if you go back and check out most of these news release, this is what you get. Do you understand that?
Yes.
All right. So today we basically did just the manipulation phase, the supply and demand, EPI, APA, and accumulation distribution. On our next class, we are going to talk about the advanced stage. That's where we're going to talk about algo, everything about algo in our next class. Okay, and that is going to be on today is January 31st, Tuesday. That's going to be on Friday. Our next class will be on
Okay.
Fridays. Is same time good for you?
Yes.
Yeah, so we're going to talk about the advanced stage of everything about algo on Friday. So basically, you can go on chat and all what we studied today, you can check them out, which is the supply and demand zone. So what you're going to do, just mark out um um 10 valid supply zone, 10 valid demand zone. Remember, for a valid supply or demand, we want to see a BOS that is going to later turn to a fake BOS, and then we're going to see an inducement imbalance, imbalance, inducement. You understand?
Yes.
So just give me 10 valid supply, 10 valid demand. And if you're doing that, you should mark out where the fake, where the break of structure happen, where the inducements happen. Okay. Then for EP and IPA, just for the EP and IPA, I'm not going to give you what you're going to do in specific, but just mark out some things on it. All right.